Welcome to Alpha Recap, your end-of-day sector briefing from stockalpha.ai. Markets closed with a noticeable split today, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. So, what really stands out here is how energy, materials, and crypto led the charge, while other groups absorbed policy and security noise.
Exactly. To start at a high level, energy and commodity-linked sectors rallied on physical tightness in crude and geopolitical headlines. Materials and mining picked up on project financing and drilling, and crypto saw renewed institutional flows, even as security incidents popped up.
Right, and that institutional crypto flow was pretty headline-grabbing. Spot Bitcoin exchange-traded funds pulled in $471 million in a single day, the biggest daily inflow since February.
That was a big number. But the other side of crypto reemerged too. A $285 million DeFi hack hit the headlines, and analysts pointed to about $11 billion of fraud in 2025 as part of the backdrop.
So it's institutionalization plus operational risk. Miners, ETFs, power demand, all tied together, but the security side keeps custody and compliance front and center.
Let's dig into the outperformers first. Energy led on physical crude tightness tied to Middle East disruptions. That pushed energy equities higher and even helped some renewables and electric vehicle-linked names because higher fuel costs make substitution more attractive.
Yeah, when the oil market tightens like that, it's not just oil companies that benefit. Higher fuel prices ripple into materials, into logistics, and change relative economics for electrification and renewables.
Materials and mining were also strong. Project restarts, new drilling in Western Australia, and financing deals kept momentum. For example, Macquarie backed Masabi with $150 million, and Versamet added a 3.52% stream on SK Creek Gold.
Those kinds of structured financings, streams and royalties, indicate capital is available, but often at terms that change the upside profile for equity holders.
And crypto, like we said, had pockets of strength despite the security headlines. ETF demand and miner positioning created buying interest, but it's clearly a two-edged sword.
Totally. Institutional flows mean ETFs and custody services are working. But miners have to secure long-term power contracts if they're going to scale sustainably. That ties crypto into electricity and utility dynamics in a real way.
On the flip side, some sectors underperformed. Industrial and manufacturing struggled. Logistics cost pressures, tariff uncertainty, and even a Walmart fulfillment closure weighed on the group, despite a very large defense proposal.
Exactly. The Department of Defense floated a $1.5 trillion spending proposal that underpins long-term defense demand. But in the near term, logistics and tariff noise dominated.
Utilities presented a mixed picture too. Storage and nuclear headlines offered upside, while coal restarts and tariff probes in solar raised policy and execution risk.
Communications and media were headline-driven as well. A local Rome court ruled against Netflix's price hikes, and there was a $63.5 billion takeover bid for Universal Music. Two very different forces.
Yeah, regulation and M&A at the same time. One hand is saying consolidation. The other is saying legal constraints on pricing. Very mixed signals for global media players.
Let's talk about the mixed sectors. Technology was structurally positive thanks to AI-driven capital. NVIDIA-backed data center funding showed up in the headlines. But cybersecurity warnings and controlled model rollouts, like Anthropic's measured approach, kept things restrained.
Finance and real estate were also mixed. Earnings and governance debates, led by Bank of America's key report, balanced against real estate deal flow. Carmel Partners closed a $1.35 billion fund. Welltower bought a Florida senior campus for $87.2 million, and Empire State Realty Trust moved a midtown office.
Healthcare and consumer had their own balance. Innovation and M&A supported them. Novo Nordisk launched a high-dose obesity product, and Henkel agreed to buy Olaplex. But policy and infectious disease risks remain a dampener.
Okay, time for the cross-sector themes. First, geopolitics and commodity prices are recoupling energy, materials, and broader markets. Physical crude at record levels pushed energy equities and fed into higher input costs elsewhere.
Right. That tightness makes resource projects look more attractive, but at the same time raises inflationary pressures that could influence central bank thinking down the road.
Second, institutionalization of crypto is creating new interplay with finance and energy. ETF flows, again, $471 million, signal allocation interest. But miners' power needs tie crypto to electricity markets.
Third, AI is a cross-cutting growth engine. NVIDIA-led funding and pilots in retail and industrial automation show demand for compute is driving CapEx. But cybersecurity warnings mean deployment risks still matter.
And fourth, policy and legal risk are shaping winners and losers. State cannabis legalization moves and hemp enforcement pauses helped that sector. But multi-state operator bankruptcies remind everyone this is still a tricky market.
Fifth is capital deployment. We're seeing selective deal flow, structured financing for materials, big funds in real estate. So capital is there, but often with strings attached, like streams and royalties.
Let's highlight the most consequential moves. 1. Spot Bitcoin ETFs pulling in $471 million mattered because it signals institutional allocation and links miners, ETFs, and custody into the same playbook.
2. The energy rally driven by physical tightness. That shift was about more than price. It affects renewal economics, transport costs, and could have inflation implications if it persisted.
3. Materials financing. The Macquarie $150 million support for Masabi and Versamet's 3.52% SK Creek stream showed capital for projects, especially those tied to electrification and defense supply chains.
4. Security incidents in crypto. The $285 million DeFi hack reminded everyone that operational risk drives regulatory scrutiny and compliance costs for institutional participants.
5. Media legal fights. The Rome court ruling on Netflix pricing and that $63.5 billion Universal Music bid showed how local legal systems and big M&A can move the needle differently.
6. Real estate deal activity. Carmel Partners' $1.35 billion fund, Welltower's $87.2 million purchase, and ESRT's Midtown transaction point to active capital recycling amid mortgage process friction.
7. The industrial split. A $1.5 trillion DoD proposal is a multi-year tailwind for defense, while logistics closures and tariffs created short-run headwinds for broader manufacturing.
Quick reactions.
Wow, big swings today.
Not what anyone expected.
Yeah, that tracks.
Now some actionable insights, purely informational. Analysts note that reassessing exposure to energy and materials with scenario analysis made sense given the physical tightness we saw. If the crude tightness persisted, producers' cash flows would look stronger. If tensions eased, the market could reverse quickly.
Treat crypto ETF flows as institutionalization, not immunity. $471 million in inflows shows demand, but the $285 million hack and broader fraud totals argue for careful counterparty and custody due diligence.
Favor companies with defensible tech moats in AI deployments. NVIDIA-related data center funding and pilots were catalysts, but cybersecurity and controlled rollouts mean measurable ROI and strong controls will differentiate winners.
Watch policy and local regulation for content and consumer businesses. Court rulings on pricing and state cannabis moves can produce outsized short-term effects on subscribers and addressable markets.
Monitor financing terms in materials and real estate. The prevalence of streams and royalties, like that 3.52% stream, means capital is available, but deal economics deserve careful scrutiny.
For utilities and grid-exposed names, focus on transition readiness and operational flexibility. Storage demand, coal restarts, and generator stress argue for assessing asset mix and regulatory exposure.
And finally, Digest defense-related industrial exposure with an eye to program timelines. A $1.5 trillion proposal supports long-term bookings, but revenue recognition and phasing can lag headline appropriations.
Let's call out the main risks and caveats. Policy and legal outcomes are inherently binary and can rapidly flip sentiment. Security incidents in crypto and cyber threats to enterprise AI deployments create episodic downside that can overwhelm macro narratives.
Commodity prices are highly sensitive to geopolitics. A de-escalation in the Middle East could quickly reverse the energy and materials moves we saw today.
Looking forward, here are the key things to watch. Oil and physical crude flows and tanker data. Crypto custody and regulatory actions from agencies like the SEC and banking regulators. AI revenue signaling and data center bookings. Mortgage workflow noise and rate moves. And project financing and permit activity in materials.
Also keep an eye on media M&A headlines and local legal rulings. They can change revenue expectations fast, especially for subscription-driven businesses.
Okay, quick takeaways before we go. 1. Today was a rotation into commodity and project-driven sectors, led by energy and materials on physical tightness and deal activity. 2. Crypto saw fresh institutional flows, but operational and fraud risks remain salient. 3. AI remained the undercurrent, supporting CapEx and tech names, but deployment and security risks temper the speed of revenue gains.
And 4. Policy, legal, and financing structures will determine whether this momentum lasts. Analysts note that deal terms, regulatory outcomes, and commodity flows are the key variables to watch.
That wraps up today's sector recap. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. And remember, this is informational only. We're not giving personalized advice or recommending any buys or sells. See you next time on Alpha Recap.